Texas versus Florida, the two titans of the Sunbelt, attracting millions with promises of sunshine, low taxes, and booming economies. But as their housing markets soar to dizzying heights, a question looms large. Which one is headed for a fall first? Today, we're diving deep into the data, cutting through the hype, and putting these two real estate giants head to head. By the end of this video, you'll have a much clearer picture of the risks and opportunities in both states as we explore which market might face a major correction by 2026. Stick around, because this is a showdown you won't want to miss. First, let's set the stage. Both Texas and Florida have been magnets for migration since 2020. People flocked from states like California and New York, drawn by the allure of more space, a lower cost of living, and business-friendly policies. This unprecedented influx of new residents sent housing demand through the roof. Home prices in cities like Austin and Miami skyrocketed, with bidding wars becoming the norm. It felt like an endless party, but as any experienced investor knows, parties don't last forever. The music eventually stops, and someone has to clean up the mess. The question is, are we starting to hear the music fade in either of these states? Let's start our analysis with Texas. The Lone Star State is an economic powerhouse. Its diverse economy, spanning tech, energy, and healthcare, has created jobs at a blistering pace. Major companies continue to relocate or expand here, bringing high-paying jobs with them. This is a huge point in Texas's favor. A strong job market is the bedrock of a stable housing market. When people are employed and confident about their future, they're more likely to buy homes and keep up with their mortgage payments. Cities like Dallas, Fort Worth, and Houston have seen tremendous growth, but it's been fueled by real economic expansion, not just speculation. That's a critical distinction. However, Texas has a secret weapon that also serves as its potential weakness: its ability to build. Unlike geographically constrained states, Texas has vast amounts of land available for development. This has led to a massive home-building boom. In theory, this is great news for affordability. More supply should help balance out the high demand and keep prices in check. But here's the catch. What happens if they overbuild? We're already seeing signs of this. Inventory levels in some Texas markets, particularly in the Austin area, have been climbing rapidly. The number of new homes sitting on the market is at its highest level in years. This glut of supply puts downward pressure on prices. If demand suddenly slows down, all those new homes could sit empty, forcing builders to slash prices and potentially triggering a domino effect across the entire market. This is the biggest risk facing Texas right now, a classic case of supply outpacing demand. Now let's fly over to the Sunshine State, Florida. Much like Texas, Florida has benefited immensely from post-pandemic migration. Its population is booming, and its economy is strong, particularly in sectors like logistics, finance, and tourism. Miami, Tampa, and Orlando have become hotspots for both domestic and international buyers. But Florida's housing market has a different set of challenges, and they are significant. The number one issue is affordability, or rather, the lack of it. Home prices in South Florida in particular have become completely disconnected from local wages. The median home price in Miami is now over 10 times the median household income. That is a dangerously high ratio, and it makes the market incredibly vulnerable. But the affordability crisis is being supercharged by another even bigger problem: the insurance crisis. Florida is on the front lines of climate change. Hurricanes are becoming more frequent and more intense, leading to catastrophic damage. As a result, property insurance costs have exploded. We're talking about homeowners seeing their premiums double or even triple in a single year. Some are being dropped by their insurers altogether. Major insurance companies are pulling out of the state because it's just too risky for them. This isn't just an inconvenience, it's a fundamental threat to the housing market. If people can't afford to insure their homes, or can't get insurance at all, they can't get a mortgage. And if you can't get a mortgage, you can't buy a house. This insurance crisis acts as a massive brake on the entire real estate ecosystem, and it's a problem that Texas simply doesn't face on the same scale. So we have Texas grappling with a potential oversupply of new homes, and Florida facing a dual crisis of extreme unaffordability and skyrocketing insurance costs. How do we weigh these risks? In Texas, the problem is largely cyclical. Housing markets go through periods of building booms and busts. While a correction due to oversupply could be painful, it's also a self-correcting mechanism. Lower prices will eventually attract new buyers, especially with the state's strong job growth acting as a safety net. The fundamental economic drivers in Texas remain very strong. Florida's problems, on the other hand, feel more structural and long-term. The insurance crisis is directly linked to climate change, which is not a problem that's going away anytime soon. It's a systemic risk that undermines the very foundation of property ownership in the state. You can't just wait for it to pass like a normal market cycle. Furthermore, the extreme price-to-income ratios in key Florida markets are a classic red flag for a bubble. When homes are priced for a perfect world, any small shock can have an outsized impact. A hurricane, a mild recession, or a spike in unemployment could be the pin that pricks the bubble. Let's look at the numbers for 2026. Projections are always tricky, but the trends are telling. In Texas, we're likely to see continued price stagnation or modest declines in overbuilt areas like Austin as the market absorbs the new inventory. It might feel like a collapse to someone who bought at the peak in 2022, but for the state as a whole, it's more likely to be a slow deflation rather than a dramatic crash. The diverse economy should provide a cushion. For Florida, the outlook by 2026 is more precarious. The insurance problem is a ticking time bomb. As more people's policies come up for renewal at these astronomical rates, we'll see an increase in forced sales. People will have to sell simply because they can no longer afford the total cost of home ownership. This will add more inventory to a market where demand is already being squeezed by high prices and interest rates. This combination of forced selling and shrinking buyer demand is the classic recipe for a significant market correction, a true collapse. The glitter of Miami and the appeal of the beaches can't defy economic gravity forever. So, which housing market collapses first? Based on the evidence, Florida's market is standing on much shakier ground. While Texas faces a potential oversupply hangover, its strong, diverse economy and ability to self-correct give it a level of resilience that Florida lacks. Florida's challenges are more profound and systemic. The trifecta of extreme unaffordability, an unsolvable insurance crisis, and its vulnerability to economic shocks puts it at a much higher risk of a significant and painful housing market collapse by 2026. This isn't to say Texas is completely safe, but the nature of its risk is different and arguably more manageable. The story of these two states serves as a powerful reminder that not all booming markets are created equal. It's crucial to look beyond the headline price increases and understand the fundamental drivers and risks underneath. What are your thoughts? Are you living in Texas or Florida and seeing these trends firsthand? Let me know in the comments below. I read every single one. If you found this analysis helpful, do me a favor and hit that like button and subscribe for more deep dives into the real estate market. Thanks for watching, and I'll see you in the next video.